Good morning, everyone. Markets regained their poise after U.S. Fed Chairman Bernanke came out with some encouraging words about U.S. growth and reaffirmed his support for quantitative easing. Although European stocks closed lower across the board, U.S. stocks finished higher and U.S. bond prices ended down a bit. But many of the other risk-on trades, such as dollar-yen, failed to perform, and gold ended higher, indicating that the fear level in the market is still higher than it was last week before the Italian elections. The focus is likely to remain on Italy today. The country is auctioning 5 and 10-year bills today, which will be an important gauge of investor sentiment towards the country. Yesterday's issue of 6-month T-bills went poorly, and longer paper may be even more difficult to sell. Meanwhile, everyone's wondering what will happen with Italian politics. The parties can't come up with a workable majority in the Senate. Mr. Bersani, the center-left candidate, will try to form a government, but he wasn't specific about which parties or groups he'll try to include in it. A representative of former Prime Minister Berlusconi's center-right party indicated that weeks of tough negotiations lie ahead before a new government can be formed, possibly in late March. The most likely outcome is just a caretaker government that comes up with a new electoral system, meaning another vote. So we have at least a month more of uncertainty, maybe even longer. My big question is what people in Portugal, Spain, and other countries suffering under austerity programs must be thinking as they watch Italy reject the EU dogma. In Portugal, for example, the government's already acknowledged the failure of its austerity program by saying it'll seek an extra year to meet the deficit target that it agreed to only 6 months ago. How far can you push austerity in a democratic system? That's what Europe is testing now. One key will be what France does. If France is allowed to miss its budget targets, then all the countries will try to follow suit. I think we've entered a new period of risk for the Eurozone. I don't see a Eurozone breakup, but I think the market will have to price in the tail risk of a Eurozone breakup or at least a return to the frequent Euro crises and last-minute meetings that we had last year. That means a lower Euro against all currencies. Our near-term target for the next few days is 129. I think longer-term euro-dollar could go even lower. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.